Alright guys, in this video, I'm going to explain to you what happened last week on Friday, Thursday, and Wednesday of last week, why there is a huge market pullback, right? All of the stock, like probably like over 80 to 90% of the stock, it dropped by 20 to 50% or even more, including the company like Tesla, NIO, IPOE, and a bunch of different stock in the tech sectors or even in other sectors as well. So let's walk close in. Before I explain to you why there is a big pullback in the market, right? I want to walk you through first, what is a market pullback? What is a market correction? A market pullback is basically a bunch of stock like Tesla, NIO, Expand, and a lot of stock, they pull back. That means they drop 20 to 50% or sometimes more within that 1 day, 1 week, or it could drag up to a month, okay? So that is called pullback. Now, what is a market rotation? Basically, a market rotation is like sometimes the EV sectors, the technology sectors, it's going up so high. And if you see this week, right, the market experienced a huge pullback, but at the same time, it experienced a market rotation. That means all of the EV, like all of the EV sector, technology sector, is went down. But if you look at some of the other business like Rolls-Royce, right? You look at some of the airline industry, you know, like Rolls-Royce, you look at Carnival, you look at Spirit, you look at Nordstrom. The price is going up. So that is mean that it's rotate. It's like the technology sector, the EV, is going up right now. It's going down. Now it's rotate to the other sector for it to go up, right? So that is what happened right now. The market is pulled back and it's rotate. Right now, so many people tell me, Jimmy, the market is crashing. No, right now, the market is not crashing yet. Crashing is mean a volcano is erupt. Volcano right now is not erupt yet. It's only leak out some lava, right? So pullback is like some lava. It dropped, but it's not like explode yet. It's not erupt yet. When is the market crash? This is what happened. You will see a bunch of stock is crash, and the period is going to be a long, long time, like 1 year, 2 years, or even drag out to 3 to 4 years. That's called market crash. If you look at in 2000, that is a serious market crash. The house industry is collapsed, house foreclosure, even bank is foreclosure. So in 2008, it's the same thing. That is mean the market is crashed. Right now, guys, the market is not crashed yet. It's just pulling back, and it's probably going to rise up again. But eventually, it could crash. I don't know when yet. So now, let me tell you what is the reason, the real reason that I think why there is a crash, right? You know, why there is a huge pullback, right? This is the reason why. I'm going to share with you a couple of reasons, but I think one of the main reasons is this. Right now, if you look in the market, the government in Joe Biden administration, basically, he about to print, the government is about to print $1.9 trillion in stimulus check. They're going to take that check and they're going to send out to a lot of people. And a lot of unemployed people, they're going to benefit from the check in the short term. But this is what happened that you guys don't know. When the government prints so much money, there are some problems. The first thing they have to do is, when the government print money, they need to issue out something is called bond. Bond is basically this. The government right now, they issue bond to the institution. They issue bond to the bank. They issue bond to the insurance company. So let's say, imagine I am the government, right? And this is the bond. It's basically it's a piece of paper. I say, hey, guess what happened? I'm about to print out $1.9 trillion, and I don't want the money to be inflated. I don't want, you know, the government to be in debt. I want to give you this thing right here as a bond. He say, hey, borrow me some money. Let me borrow some money, guy. The bank, the institution, and the insurance company. And let me borrow, let's say, $billion from multiple banking, right? Multiple institution. And I say, within the next 1 to 2 year or 3 year or 4 year, according to the note, to the bond, that basically I'm going to pay you back. So let's say, let me borrow that money, right? And in 1 to 2 years, I promise we're going to pay you back. The government going to pay you back, and this is the guarantee. And if you look right here, basically, the money is guaranteed by the government is going to pay them back the money, pay back to the bank, pay back to the institution, pay back to the insurance company, and the government going to offer them as a high interest rate. So that means it's guaranteed. So if the government issue the bond to them, that's basically they're going to receive that bond, and they're going to guarantee the money at a higher interest rate. So guess what happened? Right now, a lot of the banking institution, insurance company, they buy into this bond, trillion of dollars or billion of dollars. And guess what happened? When they buy into the bond, what happened is they probably sell a lot of stock out at this moment, because stock is very volatile right now. So all this institution, all this bank, and they want guaranteed money from the government. So they sell the stock, they buy the bond, and guess what happened? If they sell the stock, the price is going to drop. And that's exactly what happened. The price is going to drop. So when the price is going to drop, that's the market experiencing a huge pullback. So that is what happened right now. Now, I'm talking about the government, right? When the government, they print $1.9 trillion, and they send it to the people. Like I always say, when the government prints so much money, the money is going to eventually become worthless, and the money could be inflated. If the government doesn't know how to handle the money properly, eventually that's going to happen. And as a matter of fact, if you look at right now, like, this is the thing that I'm concerned about, like the $15 per hour, like they going to pay the employee, they're going to pay the people. So they raise the price to $15 per hour. And when they raise the price, basically the small business, they're going to suffer, because not all the small business, they're able to afford to pay the people $15 per hour. Right now, they already suffer from the COVID-19 already. So when the small business like me, like you, have to pay the employee that much, basically in the long run, they even have to pay tax even higher, because the government gonna ask them to pay more tax. Eventually, small business suffer is gonna close down. And if you look back in the past, that's what happened. Small business suffer, and on top of that, when small business suffer, guess what happened to the people? The people eventually become unemployed. That's why you look right now, the unemployment rate is so high and so high, right? And when that all happened, I really hope the government will have a way to solve the problem. When that happens, if the government cannot solve that, it's going to lead to inflation. It's going to lead to market crash in 2008. That is what happened. So now let's go back to the government. The government right now, they issue the bond. The large bank, institution, insurance company, they buy the bond, right? They buy the bond. That means they have to sell the stock. That's why the stock experienced a huge pullback. And when the government, they send out the stimulus check to the people, this leads to right here. The people will have money. Like me and you, we have the money, right? And guess what happened? When the stimulus check is come out, people that have the money, they inject the money back into the stock market. And guess what happened? The stock market temporarily is going to rise up. So I expect right now is a pullback in the stock market. The stock market is eventually going to rise back again. But that is only for temporary. If the government cannot solve the problem of the small business, it's called the money to inflate. If the government in the long term cause the unemployment rate to go up more, small business have to pay more tax, and small business die out. And on top of that, if the government cannot pay back the money to the large bank, to the institution, to the insurance company, eventually, guess what happened? The market will crash, and it's probably lead to the depression. So that is some of my take, but other reason, I'm just gonna say real quick, the other reason it could be like, for example, beside this is the main thing, right? The bond. Another reason could be like the hedge fund. The hedge fund, they probably short sell, you know, they right now the price is high, they short sell some of the stock. They short sell some of the option because people like you and me, let's say you buy option, they have an expire day. They short sell, so when your expire day is gone, you lose the money. Investor right now, that invest into EV company, invest into technology company, they profit 200%, 300%, or sometimes 500%. They withdraw the money based on the panic of the huge pullback right now. And when they're doing that, the stock is gonna drop, right? That's the second reason. And of course, the trader, like you buy low, you sell high, buy low, sell high. Basically, you panic and you sell off. When you panic, guess what happens? You cut your sell loss, you sell off, and some people, right now is the tax season. The trader probably gonna take some money out to pay tax. So that's a couple reasons why you see the stock market is temporary, have a huge pullback, but I expect this thing is not gonna last long. It's probably gonna last like for a few weeks, or maximum is only gonna be 1 or 2 months. And after that, it's gonna pick back up, and the stock market is gonna rise back again when the stimulus check is come out. But that is only for temporary, guys. So probably I'll see you guys in the next video, and I'm gonna explain more and why. Watch my next video. I'm gonna explain why. How can you profit from the huge market pullback? How can you profit when the market is actually crashed? What do you do to prepare yourself to capitalize when the market is crashed or the markets have another huge pullback? All right, see you guys in the next video.